Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into these financial reports to uncover the real story behind the numbers, and this latest filing from SS Innovations International Inc. is certainly no exception. It looks like they are making some big moves and the financials are reflecting a period of significant change. Before we jump in, if you appreciate getting straight insights from corporate documents like this, consider subscribing, and if you want to dive deeper and discuss these findings with our community, the link to our Discord server is in the description below. Alright, so what are we looking at here? This is SS Innovations International Inc.'s quarterly report for the period ending the 30th of September 2025. Think of it as a progress report for the company from July to September of this year. Let's start by looking at the company's financial snapshot. As of the 30th of September 2025, they had total assets of about $69.6 million. That is a huge jump from around $42.4 million at the end of last year. Where did all this growth come from? Mainly through increased cash and much larger inventory. Their cash position skyrocketed from just under $500,000 to over $5.6 million. That is quite a boost. On the flip side, their liabilities also grew to about $29.9 million from $28.9 million. Now let's talk about the money coming in for the 3 months ending the 30th of September 2025. The company raked in over $12.8 million in revenue. That is nearly triple the amount they brought in during the same period last year, which was around $4.3 million. And for the first 9 months of 2025, sales hit nearly $28 million, a big leap, from about $12.5 million in the same period last year. This growth seems to be driven primarily by system sales, which are up significantly, but with increased sales comes increased cost. The cost of generating that revenue also went up substantially from about $2 million in the third quarter of last year to over $6.6 million this year. For the 9-month period, it rose from about $8 million to nearly $14.8 million. This rise in cost of revenue is expected when you are selling more products, but it is important to see if the profits are keeping pace. And are they the gross profit, which is what is left after you subtract the cost of making the product from the sales revenue, grew from about $2.3 million in the third quarter of 2024 to over $6.1 million in the third quarter of 2025. That's a very healthy increase. For the 9-month period, it jumped from about $4.5 million to over $13.1 million. This indicates the company is managing its costs relative to its sales effectively. However, operating expenses are also on the rise. Selling, general and administrative expenses, the cost of running the business outside of producing the product, jumped significantly. For the 3-month period, it went from about $2.5 million to over $4.8 million. And for the 9-month period, it increased from about $7.6 million to over $11.4 million. The company points to higher legal and underwriting fees and expenses for business events to explain this. Interestingly, stock compensation expense decreased quite a bit from over $2.4 million to around $2.1 million for the quarter, and even more dramatically for the 9-month period, from over $12 million to about $6.1 million. They attribute this largely to reversals of expenses for employees who have resigned. Despite the revenue growth and improved gross profit, the company is still operating at a loss. For the third quarter of 2025, the operating loss was about $1.8 million, a noticeable improvement from the $3.2 million loss in the same quarter last year. For the 9-month period, the operating loss significantly shrunk from over $17 million to about $7.4 million. This narrowing loss is a positive sign. A new line item here is income tax expense. For the 3 months and 9 months ending the 30th of September 2025, the company recorded income tax expenses of about $1.8 million and $2.2 million respectively. This is because their Indian operations, which historically incurred tax losses, are now generating enough taxable profit to warrant paying taxes. So what does all this add up to for the third quarter of 2025? The net loss was about $3.7 million. This is an improvement from the $3.2 million loss in the same quarter last year. For the 9-month period, the net loss narrowed substantially from over $17 million to about $9.6 million. While still a loss, the significant reduction in the overall loss is a key takeaway. Let's look at inventory. It more than doubled from around $10.2 million at the end of last year to over $20 million. This increase in inventory is aligned with their sales growth and strategic expansion in production. Accounts receivable also saw a good increase from about $4.4 million to nearly $6.9 million for the current portion, and the non-current portion more than doubled as well. This surge in receivables is typically a consequence of increased sales, particularly those with deferred payment terms. The company has been actively managing its debt, In February 2025, they repaid several promissory notes totaling over $4 million in principal from Sushruta PVT Limited and over $1 million from Andrew Economos. They also converted significant amounts of debt from Sushruta PVT Limited into company stock, showing a strategic move to reduce debt and issue equity. Their bank overdraft facility also increased as of the 30th of September 2025. It stood at over $10 million, up from about $7.9 million. This suggests they are utilizing more short-term borrowing to manage operations and growth. Deferred revenue, which represents payments received for services not yet rendered, has also grown significantly from about $6.4 million to over $8.7 million. This is a positive indicator of future revenue recognized from current sales. Their investment in property, plant, and equipment has also climbed from around $5.4 million to over $8.2 million. This suggests ongoing investment in their production and operational capabilities. And finally, that cash position we mentioned earlier, a massive increase in cash and cash equivalents from just over $466,000 to over $5.6 million. This boosted liquidity provides more financial flexibility for future operations and growth initiatives. Depreciation and amortization expenses rose from about $119,000 to $297,000 for the quarter. For the 9 months, it increased from $290,000 to over $766,000. This is directly tied to their increased investment in property, plant, and equipment and reflects the wear and tear on these assets. The income tax expense we saw earlier, this is the first time we see a significant income tax expense impacting their net loss. For the 3 months, this tax expense was around $1.8 million, and for the 9-month period, it was over $2.2 million. This shows their Indian operations are profitable enough to be taxed. Looking at ongoing commitments, the company has lease agreements for office and manufacturing space primarily in India. Their longest lease extends to March 2030. One notable contingency involves a transfer pricing adjustment from tax authorities in India. The transfer pricing officer proposed an adjustment of over $550,000. While the company has received some relief from the dispute resolution panel and is appealing further, the outcome remains uncertain. However, the company does not believe this will result in any material financial impact to its statements. The company also reports foreign currency translation losses primarily due to its Indian subsidiary. This is a common accounting entry for companies with international operations. We saw a decrease in stock compensation expenses. This is due to employees leaving and the associated expense reversals. This is a normal occurrence for companies that grant stock options and restricted stock units. The company's revenue has more than doubled year over year, and their gross profit margins are showing improvement. This is a very positive sign and indicates that their core business operations are becoming more efficient. It gives them much needed breathing room and the ability to fund future growth without immediately relying on external debt or equity. Given they are still operating at a net loss and have a substantial accumulated deficit of over $53 million, managing their cash flow and securing further funding remains paramount. While a natural consequence of higher sales also means they need to manage these working capital components carefully. Inventory management is key to avoid obsolescence, while efficient collection of receivables will improve cash flow. This is evident from the increased investment in property, plant, and equipment, and the growth in deferred revenue, which signals future sales. Their manufacturing base in India likely provides a significant cost advantage. The substantial increase in selling general and administrative expenses, especially legal and underwriting fees, could be a concern if not managed. The ongoing dispute with Indian tax authorities, while currently not expected to be material, warrants monitoring. And as with many growing companies, the need for continuous funding and the potential for dilution of existing shareholders are always factors to watch. They are successfully increasing their sales and improving their gross profit. The significant increase in cash reserves is a major win. However, they still need to navigate the path to profitability, manage their operating expenses effectively, and secure adequate funding for their ambitious expansion plans. The company is showing strong signs of progress, but the journey ahead will require careful financial stewardship and strategic execution. Alright, that is our breakdown of SS Innovations International Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Are you impressed by their growth or concerned about their expenses and ongoing losses? Let us know in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into the world of corporate finance. And remember, for more in-depth discussions and to connect with other analysts, check out our Discord community linked in the description. Thanks for watching, see you next time.